and decode what the technical setup for the trade is going to look like for later today. And we've got Mr. Rajesh Palve, Head of Technical and Derivative Research at Axis Securities, joining us on the show. Rajesh, hi, morning, and good to be speaking with you today. How are you looking at the trade setup for the day and for the rest of the week, given the kind of last-minute bounce up, if I can call it that, on the Nifty that we've seen, and 24,300 is a level that we've held on to for now?
Yeah, hi, good morning, Sneh. Good morning, everyone. So looking at the rollover activity, Nifty has slightly on the higher side rollover compared to last 3 months, 6 month averages, as well as the Bank Nifty has also demonstrated higher rollover compared to last 3 months, 6 month rollover activity. So on a percentage wise, yes, it looks, market is optimistic and for this beginning of this new series. Market-wide rollover is also in line with the last 3 months, 6 month averages. So I think overall market is poised to move further higher as market is waiting for some positive news. If it comes in coming days, I think we may see some recovery to play out in the next couple of weeks. Looking at the data setup, most of the put writers are confident at 24,200, strikes. So if at all, if we able to hold these level for next couple of days, I think market may show some bounce and maybe Nifty can scale further towards 24,450, even 500 zone in the next couple of days. So that's the immediate trade setup for the Nifty. Overall, Nifty and Bank Nifty is looking, positive at this moment. Keep your stop loss around 24,200 for Nifty and expecting target of 24,500 in the continuation of this pullback action, which we have seen in the previous day. Again, for Bank Nifty, it's almost trading near to the immediate supply zone of 57,600, 700. If at all Bank Nifty crosses these level, I think here also there is a possibility of 58,000 to 58,200 we may see in the near term. So Bank Nifty is also one can look to buy with stop loss of 57,250. On its sectors front, I think automobile is looking promising. Telecom is also another pocket where one can focus on. Capital goods is another space where we have seen, a lot of stocks have shown good traction in terms of accumulation and buying interest, and new age companies are also looking promising. So I think these all pockets are looking promising at this juncture, and I think we may see continuity of uptrend in these all sectors from stocks front.
Point taken, Rajesh. Rajesh, what's the stock call for this morning?
Morning, Harsh. So
Good
two
morning.
stock idea where we are focusing at this juncture. First one is Cochin Shipyard. From lower level, stock has recovered, and looking at the near term, short term structure, stock is poised to give breakout on the near term chart. We believe that kind of accumulation which we have observed in last couple of days, stock may extend its gain. 1570 we are projecting target with stop loss of 1495. Another stock where we are focusing is Keynes Technology. Here also good accumulation activity has been seen. Rollover data is also encouraging. We believe that this stock has also potential to extend gain. Possible upside towards 4,050 we may see in the next couple of days. On the downside, one needs to keep stop loss around 3885.
One from shipbuilding and one from EMS. Cochin Shipyard and Keynes have made it to Rajesh's radar this morning. Rajesh, I'm interested in understanding your view on the Nifty Pharma index. A couple of days of strong gains is something that we've seen on the index. Yesterday too, it was the top sectoral gainer. How are you looking at it at an index level, and any stocks within the basket that you like at the moment?
So definitely, Sneh, pharma is another space, where strength is clearly there. So pharma space is also one of the sector where, traders can find out a lot many opportunity, as Nifty Pharma Index itself is, hovering around its all-time high trajectory. And the kind of strength which we are observing despite, volatility in market, I think Nifty Pharma almost took support from its 20-day moving average, and we could see a further, up move in Nifty Pharma towards 26,800, 26,900 from the current level. From pharma space, I think Glenmark is looking quite interesting, and the way Glenmark managed to view breakout of falling trend line on weekly chart. Here we could see a good up move from the current level and possible rally towards 2450, 2500 we may see in the near term perspective. So Glenmark Pharma is one stock where one can buy with stop loss of 2360. Another stock is Divi's Lab. Here also stock after a brief consolidation again in the last trading session, we have seen a very strong bullish candle, and the kind of structure Divi's Lab is holding across all time frame, we do hold bullish view, expecting target of 9200 to 9300 in a positional perspective. So one can buy here also with stop loss of 8550. Laurus Lab is also another stock. Arvindo Pharma is also one stock one can focus on. So many stocks are there in pharma where one can deploy long side of trade. So but Glenmark, Divi's Lab, these two, and Laurus Lab, these three stocks are on our buying list based on the technical setup.
Okay, let me also bring on board Mayuresh Joshi joining us this morning. He is from MarketSmith India, of course. And Mayuresh, great having you. Let me start off with Cyient, right? Very fascinating analyst day they've had, and very strong guidances as well. They're currently doing 13% in terms of EBIT margins. They're expecting those margins to go to 16% by FY31, 15% by FY28. How realistic is that? Let's start with that.
No, so I think morning, Harsh.
Morning.
The question of realistic or not, I think is something that the numbers will tell us over the next few quarters. But going by the roadmap and expectations in terms of the order book that they probably got. So I think one of the key factors that moved in, as you're pointing out on your screens, is that they're moving in from the traditional ER&D business to the entire life cycle engineering business. Now, this has a larger TAM compared to what the ER&D market has, along with better margins. And therefore, I think if you have to crack this code very, very successfully in terms of accessing that addressable market that they probably got, ensuring that orders come through at better margins than what are probably expected to come to at this point of time, and having the entire life cycle operations with them, I think it gives them complete control of sorts as it comes to business transformation for any entity that they will take this work with, leading to better revenue visibility and growth as well. So if they're able to crack this code and the targets that they've set, I think the stock has already reacted quite significantly yesterday. I think the good times might continue for Cyient. But again, I think within this space, I think very few companies have been outliers. Either Coforge to a certain extent, persistent, and something like Cyient, which has probably interested the street at this juncture.
Okay, Mayuresh, hi, morning. Point taken on Cyient. How are you looking at Hindustan Copper in terms of the pressure that we've seen on this stock building in for the last couple of days? The government is also now going to go ahead and exercise that additional 3% OFS, a green shoe option. With the kind of fall that we've seen in the stock, do you believe it makes for an attractive buy now? If not, what else are you liking within the metal space?
Good morning, Sneh. No, our own sense as far as Hindustan Copper is concerned, as far as the price action is concerned, was more to do with how the OFS is largely getting played out. The second element, obviously, is that structurally, copper as a commodity is expected to have multiple applications, whether you're talking about batteries, whether you're talking about semiconductors, whether you're talking about data centers. And to that extent, I think kind of copper supplies globally that is expected to come through. And expectations in terms of how demand will play out. I think demand should probably exceed supply over a longer period of time. For Hindustan Copper in particular, I think the expectation largely in terms of being the only pure listed copper play in India is something to be watched out for. The management, in my opinion, as they've put out the targets or expectations for FY28, a little bit conservative in terms of both volume growth as well as expectations in terms of how copper realizations might be. And therefore, there might be a surprise on the upside if prices actually move on the upside and if there is better demand leading to better volumes, specifically in terms of domestic demand expected to go through. On your valuation front, I think valuations have sky high, and to that extent, I think Hindustan Copper needs to beat its earnings estimates on an annualized basis to probably justify its valuation. So in our own sense, I think anybody holding Hindustan Copper can hold on. For the metal space as a whole, our own sense is that ferrous players specifically are showing some signs of rebound in terms of prices coming back. If you probably look at the market prices and then link that to how rebar prices are playing out, the rebar and long product prices have obviously improved quite significantly. I think a large part of that is how the hard coking coal prices are probably playing out as we speak. So Australian hard coking coal has touched levels of up to the range of around $230 to $40 on an FOB basis. And because of that, I think that input cost inflationary factor is playing out in terms of end product prices. We're also seeing similar moves probably happening in terms of how ferrous scrap is playing out. And therefore, I think price increases is something which is more arbitrary in nature because of what has happened in terms of input increases. How much of that impact does that play on demand is something to be played out for. So at this juncture, I think our own sense is that metals have had a phenomenal run on a year-on-year basis. We'll now have a watch out in terms of how this space plays out. As an ancillary to this, I think Usha Martin is something that we like. Yes, I think the company is dependent on steel as an input, but they've ensured that the volatility in steel prices is something that they have meaningfully played out on their balance sheet. And they've reported one of the highest EBITDA per ton that they probably have in excess of 42,000, with a cash-rich balance sheet at around 475 crores. So with expectation of higher volumes in India as well as Europe and Middle East, expected to be exponentially higher over the next few months.
Rajesh, how are you looking at Hind Copper on charts? Because what we've seen typically is that when an OFS is launched, you'll see a bit of a cool off on the stock price. It's kind of a tactical buy sometimes and can give you some decent upsides. Good time to go long.
So looking at the near-term structure, stock is almost now trading around its 20-day moving average. So 530, 525 zone is very important to watch for near-term perspective. So if stock slips below to 525, then we could see further more, liquidation, and then possibly stock can slide further towards 510, which is its 50-day moving average support area. So I think looking at the overall long-term structure, we believe that stock should try to find some support around in range of 525 to 510, which is very attractive price point for near term to short term perspective. So if you get opportunity around these level, it's a good level to buy the stock. Even at current market price, also how stock react in today's opening, whether it's able to defend 525. If it's able to defend, then I think some pullback cannot be ruled out, and towards 560 would be the supply zone. So 510 to 560 would be the ideal range to play for near-term perspective. Any breakout above 560, again, can take stock further higher. And I think then stock may resume its upward trajectory going forward.
Okay, so positive construct on Hindustan Copper on the charts. That's the take coming in from Rajesh. Mayuresh, how are you looking at this announcement from Cipla? Pithampur unit, once again, some more trouble over there. 7 US FTA observations coming in. How are you looking at this development and how material could this be? Because this is obviously not the first time that the Pithampur facility has been under pressure, and 7 more observations. How are you reading into it?
So you're absolutely right, Sneh. So I think the expectation now largely is that they will shift that part of the operations to some other plant. And obviously, it will have some element of impact as far as overall revenues are concerned. But what I'm more interested is in how are these new launches expected to happen when it specifically comes to their multi-respiratory launches or key products that they're probably expected to probably ensure getting entry into key markets. So again, I think something that the street will take in its stride, in my opinion. But I think the more pertinent question out here will be, I think, those multi-speciality respiratory launches and the timelines thereof, based on which I think the monetization aspect and 27, 28 numbers, how do they play out for their key products?
Mayuresh, curious to know, we've seen a decent run up in some of the gold financiers on the back of the way in which gold has moved. How are you looking at them and the entire NBFC pack? In fact, we had PNB Housing as well. There's been a credit rating upgrade there. NBFCs as a whole and some of the gold financiers in particular, how do you play that?
Well, Harsh, I think the 2-point answer to your question. One, I think for gold financiers in general, I think it's something which is very sensitive in terms of how gold prices probably move. With the kind of spike that you've probably seen in gold prices in the recent few weeks, I think we've seen an obvious reaction to all these stocks under consideration. I think most of the companies, including the likes of Manappuram, which are trying to diversify from the main core gold lending business to probably ensure that if there is some element of volatility in the gold lending cycle or gold cycle in general, I think there's something to bank on. And therefore, I think we are neutral on gold financiers as we speak. For NBFCs, to answer the other part of your question, I think the quarter numbers were exceptionally good. I think we were not expecting numbers to play out as well as they have done, generally for the entire pack as we speak. And therefore, I think management commentaries, the kind of numbers that have been probably put out, have been very, very encouraging. I think you just put out PNB Housing Finance. I think stellar set of numbers in my opinion. The rating rankings look absolutely superb at Marketsville India. Shriram Finance, I think out of the top NBFCs has consistently given a very decent set of numbers in our opinion. Ujjivan Small Finance is one stock that we carry in our swing portfolios as we speak. Very decent numbers. The expectations again of having exposure of the gold loan part as well also exists in Ujjivan as we speak. There has been an expansion as well, and asset quality pressures have remained relatively sanguine as we speak. I think the only risk factor generally, Harsh, for NBFCs and then lower rated NBFCs is that if there is some element of rate hike cycle which probably comes through in the global and the Indian context, I think the lower rated NBFCs might find it a little bit difficult to navigate that over the next few quarters. And therefore, within the space itself, I think our preference has been towards the higher rated NBFCs with better capital adequacy and then better better hold in terms of the corporate backing that it probably is.
That Wellspun Corp block deal happening, which Snehi just flagged to me. So 1.6, 1.5% also on Physics Wala is what we're seeing in terms of a block, 2.4% on Wellspun. But Mahirish, fresh longs at this point of time in this space, would you still go long? We've seen a decent 10-12% rally on a Muthoot and the like. Is there still value?
So Harsh, is this about gold financiers?
Yes, please. Gold financiers, NBFCs and the like, which you just spoke about. You threw in some names as well.
Yeah, so I think we will be very, very proactive and constructive in terms of the leadership NBFC stocks I've just discussed. I think the rationale is very simple and very clear. They will be able to navigate the sole risk factor that we see at this point of time, which is purely if RBI hikes at some point of time over the next couple of quarters, looking at how global macros are broadly shaping up, as well as inflationary risks in the Indian context as well. I think the better rated NBFCs might just be able to navigate this far better than the lower rated NBFCs. And therefore, our preference towards the better rated and the bigger leadership NBFCs stays intact. If this does come through on a macro level, I think you will see an initial reaction. But I think these leadership NBFCs might bounce back sharper than one expects.
Right, okay, so a bunch of NBFCs and financials have been in focus, and in fact on the gold financing front too. Since last week, AB Capital has announced its intent to foray into gold loans. That stock has also been in focus. But Rajesh, quickly, when we talk about gold loan financiers between Manappuram and Muthoot as of now, which one is better placed on the charts?
So I think for risk to reward perspective, I think Muthoot Finance is looking attractive as the fresh breakout has been registered on a weekly chart. After a corrective move, stock has managed to give breakout on the weekly chart, and looking at the breakout, we believe that 3150 needs to keep as a stop loss to continue furthermore upside. On the higher side, 3350, even 3400 we may see in the near term perspective. Though Manappuram is also looking showing strength across all time frames. Stock is enjoying its all-time high trajectory also. So here also one can look to buy. Upside target we may see towards 380.85. On the downside, till stock is holding above 355 level, I think one can remain on the long side of trade for Manappuram Finance also.
Okay, what we'll do is slip in a very short break, come back with more. Stay with us, plenty to speak about. There's the credit card data which has come out, and you might see some credit card financiers also in focus, the likes of HDFC, of course, smaller book relatively, but SBI Cards, which is the dedicated one. We'll speak about that and more on the other side. Stay with us. Well, we were just speaking about how credit card data has shown an uptake, and we're now at the card additions, the new cards added in July, in the month of July, stood at around 12.5 lakhs versus 11.3 odd lakhs in June. So it's a nice little uptick that we've seen. And the cards in force have hit 12.3 crore, which has grown at about 10% on a YY basis. The card spends have also jumped a little bit, around 3.5% on a month-on-month basis, and transaction volumes have also seen a jump, a decent 24.5% jump on a YOY basis. The average transaction value, though, has fallen 14% odd, is what we've seen. HDFC Bank has led the card additions for July. So you've got 2.3 lakh cards added in the month of July for HDFC Bank. And then you have SBI cards as well as ICICI Bank. SBI cards has added, again, a very decent 1.8 lakhs given the size that it has. And ICICI Bank has added 1.7 lakhs. Federal Bank is the other one that really stands out. Around 1.1 lakh cards added by Federal Bank for the month gone by, which is July. IDFC First, Axis have also seen decent card additions. IndusInd was the only one to shrink the card portfolio. So you've likely seen a shrink with regard to the market share for IndusInd as well, as a result of the ongoing transition, very, very likely. So that's how it's playing out. Let me also bring on board Shivangi Sardar, technical analyst at Motilal Oswal, joining us this morning. Now, before I come to you, Shivangi, very quickly on to Mayuresh. Mayuresh, what are you making of the trends with regard to the card spends and the card data which is coming at us? And SBI cards, that's been one which has been languishing since a while, right? Looking possibly at upsides now or not really?
No clue, Harsh, and I've never understood this business fully.
Okay.
And the reason why I'm not able to comprehend this business is because it's an unsecured business at the end of the day. Secondly, I think in terms of the entire revolving credit aspect that the regulator has probably put through, how much does that play a part? Third, I think being of an unsecured nature, I'll tell you, I still receive 4 to 5 calls from the same companies every passing day, asking for increasing limits or applying for a new card, etc. And therefore, I think when the cycle is good, it's absolutely fine. When the cycle starts turning a little bit orange, I think that's when numbers start turning out a little bit more softer on the balance sheet. And therefore, I think it's all fine as we speak. But no, because I don't understand the business, having no views on any of these things.
Absolutely got that. Shivangi, hi, morning and welcome to the show. Give us your sense on how you're looking at Wellspun Corp on the charts. It's more than doubled in the last 6 months itself, and we've seen a very stellar run up. What's the view? Can this rally sustain, or do you believe that this is now overdue for a little bit of profit taking?
Thank you for having me. We've seen that, of course, Wellspun Corp has kind of shown a massive amount of move in the last 4 odd months, and we've seen that it has been trading in an upward sloping channel with any small declines utilized for buying. Now, of course, this entire stock has seen a good bout of buying in the last in this year so far, if I may say, and it is up by nearly 180%. So overall, the stock looks quite positive because momentum is still continuing, but we could see some bit of consolidation at the higher levels. And the levels that I'm watching out immediately for this one would be a support of 2275 levels with an upside, towards 2450 and then 2500 levels.
Rajesh, and first off, I need to compliment Mayuresh. Not too many people coming on national television and saying that they either don't understand the business fully or they've never really got it. So credits there, Mayuresh, for that. But Rajesh, your view with regard to SBI cards in particular on charts, how is it looking?
So some recovery we have witnessed from the lower level, but if we analyze on a short to medium term perspective, it's still stock is in weak zone, and our advice would be if you get any pullback towards 680, 700 should be used as an exit opportunity, as still structure is weak, and the major stiff resistance is looking around 680, 700 zone. So that's the level where one can try to book some profits if you bought at lower level. But still, on the downside, 640 needs to keep as a stop loss. If stocks breaks below 640, I think we may see again, downward trajectory further to open, and maybe stock can slide further.
Okay. And shifting focus, Mayuresh, the other big news that we are getting from the Alcobev space is now Varun Beverages foray into Alcobev in India. They've already announced the same in Africa, but this is the big news coming in India. How material do you think this development is going to be? Because we don't have a capex plan or a timeline as of yet from them. But how negative, if at all, could this be for the existing Alcobev players like a United Breweries, United Spirits? You've got a Radico. What could the tilt look like?
Also, Sneha, from an immediate perspective, it's just an announcement, right? So I think it's not going to make such a kind of a significant dent. And again, I think we really need to understand the scale when they do foray into this kind of business, because it does take a large part of capital allocation. You need to have not just your plants in place, but also the distribution and the dealer network, which takes time to probably establish compared to what the established players have already done. And therefore, again, I think it's a large market that we are probably speaking about. The UK FTA is obviously also going to open up huge opportunities as we speak. And numbers have been pretty stellar. I think Radico has something which has been top of the racks for us at Markets with India, and it has done phenomenally well. But you look at the performance that Radico has probably delivered. The Magic Moments is doing a quarterly run rate of 1 million cases as we speak. The premium segment is expected to garner 150 to 200 bips of margins over and above the 100, 125 bips that they're probably expecting. So 19.5 probably going to 2021. And the super premium segment expected to add around 700, 750 odd crores as a base case with even better margins as we speak. They're expected to get net debt free as we hit the second half of this fiscal. And therefore, in my opinion, I think existing players which are more established as we speak do have a better controlling aspect in terms of the entire business, if I could put it that way, in terms of the entire dealer distribution, the product pipeline that they probably developed. And all this takes time, Sneh. So I think foraying is one part, but to establish all these key facts and pointers is going to take some element of time for Varun whenever it decides to do so.
You know, Cartrade has, there's been an announcement, and Banwari Lal Sharma is the CEO, and the stock has had a stupendous run. He's resigned effective the 25th of August, and the consumer business obviously continues to run under existing leadership, is what the management has cited. Vinay Sanghi will continue as CEO now, given this step down. Mayuresh, just wait back for maybe a minute or so. I'd love your take on platform companies. But Rajesh, I know I need to let you go. Give us your view with regard to some of these platform companies. Paytm, for example, has run up as well. Paytm, Eternal, all of them sitting on very close to life highs now, at least over the last year or two. Give us a sense on charts. How are these looking? And Cartrade as well, if I can throw that one in.
So definitely in my opening remark also I mentioned about new age company, and this space is looking quite interesting, and most of the stocks are enjoying continuous buying interest, be it Eternal, Paytm, Cartrade, all these stocks are in uptrend. Moving to the Cartrade stock has shown very strong run up in last couple of month, and now stock is negotiating with its all-time high trajectory, which is placed at around 3200 3250 kind of zone. So I think one can remain on the long side after any breakout above 3250 can take this stock further higher towards 3500, even 3600 in the continuation of this up move. Buy and accumulate would be strategy till stock is trading above 3050. Paytm is also looking very strong. Stock is moving in upsloping channel on the daily chart, and the kind of breakout stock has registered on a daily, weekly, monthly time frame. I think we could see further more run up in this counter, and Paytm can scale further towards 1900, even 2000 level on a positional perspective. So here also we do have a bold buy call on this stock. Buy and accumulate would be strategy on the downside. 1580 needs to keep as a stop loss. Eternal, we hold a bullish view and projecting target of 360 to 380. So here also any minor decline should be used as a buying opportunity. 310 needs to keep as a stop loss for Eternal also.
Rajesh, thank you so much. We'll let you go on that note. Mayuresh, very quickly on the platform companies and Cartrade in particular, is there a view there? How linked is this to the existing and the current CEO who's stepping down?
No, so for car traders, I think for compliance reasons, we'll not be able to discuss. But for platform companies in general, Harsh, I think Lenskart and Nykaa is something that we already have positions in our swing portfolios. And obviously, we got into these stocks at way lower levels. Our own sense is that if you look at Lenskart's numbers, the volume growth of 25%, the cash flow that they've probably thrown out for this quarter, the expectations in terms of EBITDA and EBIT margins for the domestic business and the international operations as well, inching higher over the next few years. Is a huge positive as we speak. I think a lot of supply which probably came through the past few days is largely done and dusted with. But we are very close to our targets, honestly, on this kind. I think 705, 710 is something that we had set out with, very, very close to that. Similarly with Nykaa, I think the kind of growth that we've probably seen in its own brands, as well as the expectations in terms of the key revival that we've probably seen in the overall operational metrics as far as Nykaa is concerned. I think that is a very, very encouraging sign. Again, I think very, very close to our targets that we've kept at night for around 350, 355.
You sell these at those target prices, Mayuresh, very quickly?
No, so I think our mantra is very simple, Harsh. I think if you're a risk investor, you can book out partially and then hold on to your positions.
Okay, appreciate that view and thank you so much for your time today, Mayuresh. Good to be speaking with you as always.
Always. Pleasure's all mine.
Thank you so much. Okay, just taking a look at where the pre-open rates have settled right now. Nifty absolutely flat around the 24,350 mark. But from the broader end, it's Varun Beverages on the back of that alcohol foray into India. In India, 2.25% uptick over there. Hindustan Zinc is up 2%. You've got the entire QSR pack on the back of a Macquarie upgrade coming in this morning. Jubilant Foods is doing well in the pre-open, a 2% uptick over there as well, as is the case with Sapphire Foods, up 1.5%. Then you've got UBL on the back of the new launch in multiple states, including Kerala and Odisha. The Heineken Silver, that is, UBL is up 1.6%. Cyient is another 1.5% up as we speak. Where we're seeing some pressure in the pre-open is Cummins, Areda, Wellspun Corp, Rainbow Children's Hospital, as well as Grow on the back of that block deal. 1.5% lower on Grow as we speak. But Shivangi, quickly give us your view on some of these QSR names on the charts. We've got a bullish brokerage note coming in this morning. And in the pre-open, as of now, Jubilant Food, Sapphire Foods, they're all seeing a good uptick. How are you looking at some of these names?
Now, if you look at Jubilant Food, I would just shift my focus towards Eternal. This one's looking much more promising, stock right now. It has been trading above its key exponential moving averages. And from the last 42 trading sessions, we've seen that price and volumes have been significantly higher. And overall, there has been a little bit of a consolidative move, but it has maintained its band on a higher time frame. Even on the monthly basis, we've seen from the last 4 months, it's making a higher top, higher bottom formation. So this one's looking quite positive and definitely should be on radar. I believe, the next targets that we could look at is around about 350 levels with a support zone of 325.
I wonder how you're looking, Shivangi, at a couple of other names, especially which will be in focus. Hindustan Copper being one of them. What's the view there on charts? Let's start with that.
Now, of course, the entire metal pack has kind of gained a lot of action as of now. But if you look at Hindustan Copper, it is made of course, the chart is not complete, but it is on the verge of forming a bearish engulfing candle on the weekly basis. Now, if you look at the last two sessions after the doji formation, we saw a gap down and the index, the stock sustained at lower levels. Now, volumes had been significantly higher as well with the price fall. So overall, some bit of fall is still left in this one. Apart from this, the entire metal pack is looking quite positive, and we could look at stocks like SAIL or Nalco for that matter.
Okay, that's your take on some of the metal names. The other stock in focus is MTAR Tech. After the kind of run-up that it's seen in 6 months, that stock has doubled and we've seen some very good moves over there. MTAR Tech has just bagged an order win from NPCI, and that's for 126.7, so almost 127 crore rupees from the Nuclear Power Corporation of India. Your take on the charts for MTAR Tech, Shivangi?
Now, MTAR Tech has made a narrow range sort of a formation on the monthly basis. So it's very important for this stock to now hold above the 7,300 mark for it to sustain and start a next leg of rally. But till then, we'll expect some bit of consolidation over here. The stock is not gaining immediate momentum, but overall looks positive because it's sustaining at the higher levels. Now, of course, stop losses need to be maintained because of the narrow range formation. 16,900 is what I'm looking at as a support level with an upside move of 7,300 levels.
I wonder how you're looking at some of the IT names, Shivangi, Cyient included. Could you give us a view?
Now, if you look at the entire IT pack, I think Coforge is the strongest out of the lot. And we've seen that from the last 4 weeks, it has shown massive amount of price volume surge. It has moved upwards from the last 5 months, consistently high top, high bottom formation. The rollovers also, have come in quite positive for this one. So definitely Coforge would be one stock to look out for in this entire pack.
Okay, and we're also getting word that India is planning to add about 100 new vessels on the shipbuilding front in the next 5 years. We've also heard a lot of tech transfer announcements coming in from the DRDO. So defense as a pack has been in focus for the last couple of days. Shivangi, how are you looking at some of the shipbuilding names like a Mascot Dock or Cochin Shipyard? How are they placed on the charts?
Now, Cochin Shipyard has seen, around about 89% rollover from the previous series. And we've seen that overall this stock has, made a sort of a bottom out structure on the weekly basis. So, quite a lot of potential on the upside. Risk reward is quite favorable for this one. Cochin Shipyard could definitely be kept on radar. Apart from this, I believe HAL on the defense pack is also one stock which is quite positive. A little bit of a cool off from the last 4 sessions, but again, this one's to watch out at any dips.
Jubilant Foods, what's the view there, Shivangi? Just about 10 seconds left. Give us a sense.
Jubilant Food is quite positive. In fact, this entire space looks quite well. We could also look at Eternal for that matter. If we talk about the levels, Jubilant Food 515 would be the stay. We've seen that Nifty, of course, has opened on a flattish note as we commits the September series. But one thing is remarkable that the rollovers have come in quite positive and significant. We are, at a 77% rollover, which is higher than the previous months and the previous quarterly rollovers as well. Even with a long build-up, that is with a 10, longs added on the open interest side. And the Bank Nifty has also kind of shown a short covering move with shedding of 10% OI and a rollover of around about 79%, which is again higher than its previous rollover number. So overall, the index or the indices per se are looking quite positive, and support-based buying should continue here. Even in the last few days that we saw, last 2 weeks, the support-based buying was quite strong in the index, and it took support near the 24K psychological mark. So overall, if it holds above 24,200, which is an important exponential moving average, it would continue towards 24,500 and then 24,700 marks in the next couple of weeks. But overall, the index looks quite positive and buy and decline to continue over here.
All right. Shivangi, what's the take with regard to PSU banks? They seem to be leading in trade today. Any trades out there?
Yes, definitely. PSU banks, in fact, from the last 3 sessions, they've been quite active, and we've seen that they are leading the entire banking pack. Now, some of the names which are looking quite positive are, of course, Maharashtra Bank, and one could also look at a Canara Bank. These are the names looking quite positive. But if we shift a little bit of focus, even Paytm is looking quite positive. We've seen that there has been consistent buying in this one, on a daily basis. And we've seen that volumes from the last 6 sessions have been significantly higher. The follow-up after the breakout is also quite strong in this one. So one could look at this stock for the next around about 1800 levels with a support base of 1660 zones.
Okay, Shivangi, thank you so much for joining us this morning, giving us that perspective. We'll let you go.